Everyone, welcome back. Today, Polestar IPO face a cooling market for EV stocks or EV SPAC mergers. In my opinion, it's mostly aimed at SPAC merger companies because last year was huge for SPAC mergers. In fact, it had risen hundreds of percentage. It was just an easy way for companies to go public simply by merging with another company, but a special acquisition company. That's what a SPAC is. Now, as a Polestar, they're a Swedish automaker, a Swedish EV car maker, and they're preparing to go public. But the problem is the financial market is looking uncertain right now. It's definitely not looking good. Even the crypto market isn't looking good. And the traditional finance market is definitely not looking good either, because if you take a look at Netflix, just realize what's happened to them recently. They've lost so much. And yes, it's because of the announcement that they've made of loss of subscribers, but even at that rate, they still lost a lot of investment. A lot of people just sold their shares, sold their positions. The thing is that what we have to keep in mind is that the market was doing extremely well in 2020 and it was doing rather good in 2021. However, in 2022, we're in a cooling off period. Everyone is selling position. Everyone is reflecting on what's happened recently. Things are changing. And I was a little bit worried about this last year because when I first heard rumors of Polestar going public, it was actually announced that they would go public at the end of last year in Q4. When that didn't happen, I started to get a little bit worried because I was like, actually, the SPAC market is definitely cooling down. Like you could see it, Rivian was just losing a lot of value all throughout the end of last year as well. And I was like, this is not a good thing for Polestar because they're going to come into the market with a $20 billion valuation. And I'm not so sure if they're going to have a good start. I'm not so sure at the moment. It's a lot of uncertainty. Am I worried? Absolutely not, because if the price goes down, I'm just going to buy. And if the price stays steady at $20 billion valuation, I'm still going to buy. I'm only worried if the price goes up. I'm only worried if people invest because it's going to get more expensive for me. But additionally, just let me say that obviously I can't provide you with financial advice. I cannot. This is definitely not financial advice. But let's have a look at Rivian. Now, it's been announced quite recently that Ford is selling a lot of shares in Rivian. We knew that on Monday, today, the market was just going to do a really terrible job with Rivian. The great news is that my realistic valuation for Rivian should be at 10 billion, and we're halfway there right now. So we're getting close to that proper valuation for Rivian. It's not just Rivian who's having a hard hit. Lucid is having been hit hard as well because they're not producing enough vehicles. So it's really not a surprise. Even Tesla is being hit hard. Look at their share price, $808. That's incredible. Incredibly cheap, by the way, because this is good for me. I just love cheap shares. But once again, it's big news. Ford reportedly sell Rivian stocks at a discount. Oh my goodness, it's good for me, it's bad for Rivian. I'm celebrating, it's Christmas. Anyway, let's get back onto the subject of Polestar. So they revealed plans to go public last fall. Interest in EV stocks were hot at the time. It was hot because investors wanted to invest in the next Polestar. It was hot at the time because investors wanted to invest in the next Tesla. What's the next Tesla? Where is the next Tesla? Is it Rivian? Is it Lucid? Is it Polestar? They all wanted a piece of the pie. The good news for Polestar is that they're more realistic than Rivian, Lucid, and a lot of other EV companies. They're doing what other EV companies cannot. They're delivering 65,000 vehicles this year. That is something that every other EV manufacturer is seriously struggling to do. So the exuberance sent some company valuation into overdrive, just like Rivian, creating what some sees as a stock market bubble, and it was definitely a bubble. Luxury EV maker Lucid Group commanded a $42 billion valuation after it went public in July, and in November, electric utility vehicle maker Rivian Automotive initial public offering had $66.5 billion in valuation. I think they valued at around 90 billion or something. It was insane. Rivian was insane. But everyone's trying to invest in the next Tesla, as we all know. But now that Polestar prepares to begin trading on the Nasdaq next month, the EV stock bubble is at risk of popping under the twin threat of raising interest rates and looming economical recessions. So the Rivian stocks has cratered, down by 80% from its post-IPO high of $172 in mid-November. Lucid stock has shed nearly 2/3 of this value since peaking above $55 last winter. Now the era of easy money is over, Winston said. It's definitely a more high-risk market to invest in early EV firms compared to the last couple of years. So they're saying that that could be problematic for Polestar, which is relying on a public market to help its finance its aggressive growth plans. So we've got a quote from Polestar CEO Thomas Ingerlath. Our business plan has been set around a growth plan that needs a certain funding. Without that capital, he said, we would have to find it somewhere else, or we would have to scale down and change our plans. And ideally, I don't want Polestar to change their plans. I don't want them to slow down. That's not what I want at all. But just look at the share price of the Tesla stock. You know, it hasn't been this low in the space of a month. It just hasn't. In the last 6 months, however, it's been lower. It's been as low as $766 in March the 14th. But once again, we're seeing a market that's reacting to everything that's happening into the world. And it's triggering a sell-off. Maybe this is good for Polestar because they've not IPO'd yet. Maybe it's good they IPO after all this craziness cools down. The problem is Polestar intends to IPO next month, or at least at the latest July. But I think next month is suitable because there's been just strong rumors of them IPOing in the first half of this year, which is at the end of June next month. So the Volvo affiliate has agreed to a reverse SPAC merger with an acquisition company called GGPI. The deal, which takes Polestar public, could peg the automaker's market valuation as high as $25 billion according to analysts. Now the transaction remains on schedule to close next month. That's a big rumor. In June, Polestar has a stable business with proof point of delivering thousands of cars monthly, Ingerlath said in an email last week. Investors can make their decision based on growing, revenue-generating business, not market speculation. Good. That's really good. Now, George Giannarikas, a senior research analyst at Robert W. Baird & Co., believes a shift has occurred in how the world views EV startups. Part of it has to do with the change in the market moods. Part of it is with the operational issues the company has had getting off the ground in a global supply chain crisis. Meanwhile, competitors from rapidly electrifying legacy automaker is stiffening. Lexus, Market, BMW, and Mercedes are all rolling out fleets of high-performance battery-powered EVs. Investors are now considering traditional OEMs that might have previously written off. Even Polestar has something Rivian and Lucid lacks, a multi-year record of revenue. That's true. Polestar sold 29,000 vehicles globally last year, and they reported a revenue growth of $1.5 billion in revenue. In April, the company inked a deal with Hertz with 65,000 EV to be sold to Hertz over a 5-year deal. That is huge, and that 5-year deal could be worth $3 billion of potential revenue for Polestar. To call Polestar a startup is kind of misnomer, said Sam Abu Samid, principal analyst at Guidehouse Insights. As it scales up, Polestar is learning on considerably production, supply chain, and retail infrastructure of its parent, Geely Holding, which owns several other brands including Volvo Cars and Lotus. Volvo will build Polestar third model, a mid-side crossover, at its US factory near Charleston, South Carolina, starting at the end of this year. Polestar has said it will not need to add an assembly plant to meet its 2025 volume target of 290,000 vehicles, which is 10 times last year's deliveries. So as Polestar gets to go public, it might not have had timing on its side, but Giannarikas is bullish on the long-term investment process of the early-stage EV maker. I'm bullish as well. It's quite obvious that Polestar is going to be a big deal for the. It's quite obvious that Polestar is going to be a big leader in EV vehicles in the future. They already are a big leader in the world of EV. They already are. They're developing the Polestar 5, they're developing the Polestar 3, they're developing the Polestar 4. They're selling the Polestar 2 in rapid numbers. You can't deny this. They've announced the Polestar 02, a concept supercar, a concept EV supercar, and I believe they could build this vehicle if enough interest is shown, or they build something that is extremely similar. So I do hope you've enjoyed this video. Thank you for watching until the end. I really appreciate that. Subscribe to see more, and of course I will see you in my next video.